All right, welcome back for another episode of Carnivore Trades. Today is Friday, January 20th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, right before we get into it, I just want to give a little heads up to everyone. As many of you already know, I am in the process of moving cross country here. So, and that's going to be taking place next week. On Friday, so there will be no Friday video for next week, just so you guys are aware. For members, I'll do, like I mentioned to you guys earlier, I will get some type of a write-up or something done on Friday. Just want to give everybody a heads up there as far as that is concerned. And if you're messaging me this week and I don't respond, it's not because I'm ignoring you, it's just because I'm up to the eyeballs with stuff right now. So in addition to the market. So anyways, so for today, a constructive move here for the bulls. I have to admit, I thought we were going to be green today. I figured we'd have a little bit of theta burn, maybe trade up into this 280 area here on the Qs. You see we got near that, started to consolidate on the hourly. And, I was thinking maybe kind of like a theta burn, kind of just chop type day. And it really kind of started out that way. We had basically a small gap up. We tested gap fill in the morning. And then we just had kind of a light float into the afternoon. And this bull pattern here actually played out. A lot of the time on OPEX, you'll get these kind of intraday bull patterns or bear patterns, and they'll start to play out, then they reverse, just lots of OPEX games, lots of theta burn, premium collecting, etc. But a nice rally here for the bulls, and this is definitely a much more constructive candle than what we had previously. So if you guys have been following the channel, really the last several weeks, really about a part of the last month and a half, really since these lows here, I've had a bull bias, and I said hey, we're looking for a turn in mid to late January, and really up until Wednesday I was still maintaining that, hey, let's give the market the upside bias here, because various reasons. There's no sell signal, light volume, etc., outperformance with the semis, outperformance with the transports, all that stuff. Now we did have a pretty good sell Wednesday and Thursday. We had a very constructive candle today, though. However, when I get a cycle date that triggers that kind of a move, I'm going to go with that no matter what. However, I will say this is a pretty good move here for the bulls, so I will give them credit here. And there is, this does look a lot better. We can move higher off of this, and I'll explain a few things here as far as that's concerned. But really, what I'm looking at is the weekly. So if we just clean this up here, you can see. Let me get rid of those for a second. You can see we now have more of kind of like an inside hammer type candle on the spiders. And if you look at the Qs, it's actually green. So we're actually green on the week with a tail and above the 20-week moving average. So that's much more constructive. You can see we went down to that green bar low. I said, hey, look, this holds. It's a buy signal, and we got that pretty nicely, and we've moved up here. So a much more constructive look. If we take a look at, for instance, Tesla, pretty good sell on Wednesday, and it's rebounded nicely. So instead of a reversal candle, you have kind of consolidation here. Tesla moving up nicely. Again, big Nasdaq component, big S&P component. They have earnings next week on Wednesday. That will be very, very market moving. I would typically say, you're down so much ahead of earnings that you expect an up move. But as we've seen with other stocks before, take a look at Netflix. This was down a lot into their earnings earlier this year, or last year in April, and it sold off anyway. Had a nice pop, and it's held the gains so far. I think 350, you got this kind of rising trend line, gap fill. That could be a good area of resistance there for Netflix. But in any case, big tech, Google holding up well. Like I said, Tesla holding up well. These guys have earnings, so we may see some short covering ahead of them. We might even see a pop off of the earnings announcements. I can't ever pretend to know what a stock is going to do into earnings, but that is certainly into play. And then we have the Fed coming up at the end of the month. So January 31st, February 1st. So a lot of things going on here. Bulls, definitely a win here, a constructive move. I have to admit, I did not see this much of an up move coming. I thought we'd be up today, like I said. And yesterday we did hit, again, like I mentioned, we hit the 50% fib in just 2 days. So I figured that would get defended at the very least here. But this is a V-shaped move, and we have to respect it. Next real major level here is right around 397. That's the 7.5 fib. That's just for intraday levels here, but nice move for the spiders. And I'll show you here if we do move up. I'm going to look for about 412 if we can follow through and take this pivot out. And basically what you have here is just a simple measured move. It's not perfectly drawn in there, but basically essentially 375 on the spiders to your high of 400, and your low right here is 387, and you just add 25 points, and it's right into that 412 area. So that would be above these pivots here, and we talked about this recently with the all-time high trend line. That would be above that. And if you guys haven't caught what I've been talking about, I'll show it to you guys one more time here. But you can get above these trend lines, and actually I favor this. As a bear, I would like this if you're bearish, because you can get above these trend lines, and people fall in love with them because they're very aesthetically pleasing and they look nice and they're very reliable. But you can see even in 2000, we had a nice trend line that went on for 6, 7, 8 months. That broke above for about 2 weeks, and it rolled right over. A trend line here going for 12, 13, 14 months, broke out for a couple of weeks, and then we ended up making new lows. So don't fall in love with those trend lines. They can push higher. And again, if we push up into the Fed, if we have a type of late, there's only 7 trading days in between now and the next Fed meeting. If we have one of these type moves where we gap up and get up into that 4100, 4120 area, and we're overbought ahead of the FOMC, I would honestly favor that as a bear. So we'll see what we get here. Again, it is OPEX week. So lots of whipsaw, obviously, as we saw the last 3 days. We've been all over the map, went from 400 to 387. And now in one day, we're right back up to 395. So a 7-point move on the spiders in one day. So big moves here. How much of this is OPEX action? Could we go right back down Monday? It's possible. I would think probably not. I think Monday will be much quieter as we're kind of waiting on. I think Microsoft reports Tuesday, Tesla Wednesday, and then obviously a few others there. So we'll see what we get here. But overall, a nice constructive move for the bulls. We did take profits again on another short position. So we did short the Nasdaq the other day, right before that down move, and just moved out of it. So you see, you get a nice move, against what your original thesis is. We took profits yesterday, just basic risk management. And then on the up move today, just move out of it. And even when you're kind of wrong, you can be right. So again, we'll see what we get here next week. Glad that OPEX is over. We do have earnings coming up. Levels for the SPY, again, 397. Watch that for Monday. The triple Qs, 283. We're pretty close to that right now, but that's going to be kind of your major area to watch Monday morning. Again, that's that consolidation period right there. So those are the levels to watch on those two. Russell 2000, a little bit on the weaker side, that has recouped less of the losses than the Nasdaq and the spiders. So we'll see, maybe we can get back to double top, but I see a little bit less upside in this. And then the Dow being forced down today, performing much less, much worse, I should say. I think that's a lot just OPEX related. By the way, take a look at this, right back to that 331 level. And it really hung out there all day long until kind of that, really the last hour or so, where we got that float up there. But again, Dow, nothing to say it can't go up and retest 336 here. If you get through that, 340. So again, nice constructive day for the bulls. We'll give them some credit, and a nice V-shaped move here on Friday. All right, let's get over to the semis, SMH. If we do make new highs here, we're going to look to 240 and then possibly 245. You'll have a speed bump at the double top though, but you have pulled back and you're above the all 4 major moving averages. So this can push higher here, but that will be a speed bump there at 234, 235. After that, 240, 245. On the SMH IGV, that looks like it wants the 200 and double top. I think it gets through the 200 and probably up to 278, 280 there. But that's kind of the max move I see for IGV. Dow Transport's nice move here as well. They really needed it because we had a really good rejection on Wednesday. Wasn't down that much on Wednesday like the Nasdaq and the SPY was, but to have that big of a tail candle and close red, pretty good reversal. We did bounce off the 50 MA. We're through the gap now. We'll see what it does here. I mean, if we, the Uber upside is 15,000. You guys remember back in November, I said 15,000 was going to be kind of what I was looking for in the transports. Maybe it gets up there finally after all. But again, holding up much better here. So, and again, just so everybody's aware, these are just projections if we move higher. It's OPEX week. So this could all change Monday. Everything could, we have earnings, we have the Fed coming up. So don't assume that I'm just predicting that's going to happen. But these are the levels if we do get continuation to the upside, just so everybody is aware. Another typical bond or OPEX type action here is the bond market today. Take a look at ZB. So the 30-year down 100 basis points, and the triple Qs are up 2.77%. So normally that's not the case here. To me, that's definite OPEX action. But again, kind of a nothing burger here for bonds. They're holding up well. I don't see any problems with them at the current time. You see the 10-year backing off the 200 there. These can still go higher in the near term, and they just look like they're backing and filling. I still think that 2-year wants to get up to that white trend line there. Over to home builders, XHB and ITB both higher. Nice reversal there on XHB. I still think upside on these is very limited here, although the weekly candle, just like everything else, did improve a lot. You do have just kind of like an inside doji on the ITB XHB. A little bit weaker, but much more improved here, as is VNQ, although I still do not like VNQ here. Could it have some upside to 91, 92? It's possible, but I do not like real estate, as you guys know, so I won't have to repeat myself again. XLF, nice move through the gap here. I do have max move done on this already. I believe I've already mentioned that to members here. It's decently higher, but it's not crazy. We'll see what we get here. Ally did report today, so big power earnings gap there for Ally, up 20%. Going right into your breakdown level. This might want that 200 moving average though, so you have a lot of volume and a lot of velocity behind that move. So this can always push through that whenever you see that kind of volume there. But nice move for Ally. I will say Goldman, there is a problem here with Goldman though. Down 2.25 here with the XLF up 1.5%. You know, BAC up. If we can get BAC to come up, there we go. 1.8, JPM up, 20 basis points hanging in there. Okay, Wells Fargo up 2, Citigroup up 3. So Goldman, I know they had one of their worst earnings reports in a very long time. Not a good setup here. This is not a chart of strength. If you're looking for a fin to short, this would be probably the one to do it with. And look at the volume there. Lots of volume there. Yeah, very weak name here. So any bear pattern here on Goldman could probably be played to the downside. Anyways, XBD broker dealers. Again, we talked about this yesterday. You know what? Hey, engulfing reversal, you held that 50 moving average, so maybe this gets up to 490 after all. I can't really say anything bad about it here. It's holding up very well. Onto energy crude. Again, just another nothing bugger here. Again, I do not like this as an inverse head and shoulders. We already closed below the neckline. I'm still favoring that weekly inside bar. We are not going to close above that red bar high here, so we still have an inside bar on crude. I think this probably plays down to the downside of the next week or two if it's going to happen. So crude, still kind of a neutral to bearish bias here for what that's worth. XLE, again, continues to outperform, up 1% on the day. It tested that red bar high on Wednesday, reversed, and now it's getting a good bounce here. Again, energy holding up really well. I still would not be a buyer up here. OIH inside of that big red reversal there. But again, it's holding trend. I can't say anything bad about it other than I just would not be a buyer. I think it has to do more backing and filling. Anyways, nat gas, this does want to go to $3. We do have a contract rollover next week, and it is in backwardation. So we will get probably a gap down in the contract. That might be the bottom here. And again, there is a lot of support at $3. This is wildly crowded to the downside. And I think once this squeezes, it's going to squeeze and be a pretty hard face ripping rally here. So either way though, nat gas does look like it wants to test 3, probably should happen next week here. Very oversold. Dollar index, again, holding up here, kind of a nothing burger today. It might have a little bit more downside than the DXY here. But again, as you guys know, I am favoring this as, I do have a buy signal on this, I'll say that. And I do like the dollar here. Can't rule out a little bit more downside. By the way, the yen, USD yen, I have a really, and I mean monster buy level on the yen here, or I should say on the dollar yen. It's got a little bit lower to go, but this is a pretty good setup here. So I'm getting pretty bullish the dollar, the euro as well. I think this can possibly get up to 109, maybe 109.5. That's about it though. So I do not, I am bullish dollar right now, as you guys know. But yeah, can't rule out a little bit more downside in the DXY, but I think it's about time for a major move. Anyways, gold here, it's holding up well against backing off of that trend line. I will say I don't cover GLD that often, but GLD is a very liquid vehicle. And unlike some other ETFs, this does kind of have some weight to it as far as the actual metal. And we have a pretty good gap that didn't quite get filled yesterday. And we are overbought going into that. So that could give you some resistance here. Again, you guys know my thoughts on gold. I am expecting this to come back in. It's overbought. It's holding up well. Commodities tend to overshoot. Just see nat gas. But again, I would not be a buyer up here. Silver, same thing. It's just consolidating here. I do think it eventually rolls over, though. I think it's got to come back down to 22 at the very least, possibly 21. But it's holding up right now. I wouldn't do anything with it at the moment. And then platinum getting a little bit of a bid, up 1% off of that 50 MA. And again, that kind of 10-20 area. Not a great bounce, though. It is off the highs and got rejected at the 20 moving average. So I'm a little bit neutral on it currently. Copper or green today. Could it take this candle out? It's possible. Commodities, again, tend to overshoot. But I think it's about, I mean, it's definitely getting top heavy up here. I mean, if you wanted to short it, you know, you just short it up here and put a stop above the tail on a daily close. But I will say major sign of strength, like I said last week, with that power close above that red bar. So again, a little neutral here on copper. I do think it needs to come in though. Anyways, over to Bitcoin. So nice move here. We'll be watching this. So Bitcoin, again, nice consolidation. Remember, we said this yesterday. We didn't go up into this level and then get rejected. We actually consolidated. That tells you it wants to go higher, and it is pushing up here. We'll watch it into the weekly close. So if this reverses somehow, I think it closes on Saturday, I want to say. Is it Saturday night or Sunday? I'm not sure. I don't really follow that often. The 16th was the opening candle. So the Sunday. So if this does reverse, you'll still save that weekly red bar here. We'll watch the monthly as well. So again, 21,484 on the monthly. That's your level there. Yeah, nice counter trend bounce for Bitcoin. And again, maybe that was a kind of a leading indicator that the market was going to hold up. And yeah, Bitcoin doing nicely here. I told you guys I'll only do this on Monday, but I'll just do it again today. Euro markets, just generally going to do this on Mondays, but again, we got close to that 7,900 area. We backed off. We could definitely get up to it now. There's the closing bell. This is on the FTSE, by the way. So we can definitely get up there now. We'll watch that. Maybe it gets pierced through that a little bit, but I mean, this is still very top heavy to me. DAX here, again, same thing. Backed off a little bit. You know, maybe you can get a little bit higher, but you're going into a lot. I mean, this is a wall of resistance up here. So just be aware of that on the DAX. And you can see the kind of the same thing. Euro 50 is about the same chart here. But yeah, they're holding up well. And as long as the SPX holds up, these will likely hold up. So just bear that in mind. Anyways, let's flip back over here. Closing print on the spiders, 395.71. Nice bid into the close. And again, like I said, a good day here for the bulls. We can look at where they closed this. This is typical market maker stuff. 395.97 is the 200 moving average. Where do we close? 395.71, right on that. Typical stuff here. Anyways, nice move here. We'll give the bulls the benefit of the doubt for now going into next week. Remember, we got earnings and the Fed on tap in the next couple of weeks, so be very careful with your trading. Anyways, guys, going to wrap it up here. You guys take care. You can find me at carnivoretrades.com. Talk to you guys all tomorrow.